Costco appears financially solid on the surface, but our deep analytical scan uncovered some unsettling signals. Rising debts, thinning profit margins, and pressured cash flows could spell hidden risks. We've packaged crucial insights clearly and concisely. Don't miss our surprising findings. Freeport McMoRan, headquartered in Phoenix, Arizona, leads global mining operations extracting copper, gold, molybdenum, and silver. Key assets include Grasberg in Indonesia, North America's Morenci mine, and Cerro Verde, Peru. Investors evaluating Freeport must carefully assess geopolitical risks, resource quality, and production capacity for well-informed investment decisions. Examining Costco's balance sheet reveals a cautious approach to financial management. With cash holdings near $4 billion and debt close to $10 billion at the end of 2024, Costco's liquidity remains adequate, but less robust than peers like Freeport McMoRan, which boasts stronger cash positioning and lower net debt exposure. Yet Costco's stable retained earnings of nearly $6 billion indicate effective profitability management, providing some comfort for value investors, despite the elevated leverage relative to industry benchmarks. Here's a screenshot of the full balance sheet. Costco's total assets increased to $55 billion, highlighting robust expansion, yet warranting cautious monitoring of liability growth. In the latest quarter, Freeport McMoRan improved net income by around 16%, largely due to better copper and gold prices, which increased by 13% and 35%. Higher gold sales volumes further supported earnings, but operating costs and taxes grew alongside rising revenues, partially limiting profit gains. Although net income margins have fluctuated, management believes sustained demand and strong price trends in commodities like copper create potential tailwinds, offering investors an attractive profit outlook into 2025. Here is a screenshot of the full income statement. Costco's revenue growth surpasses expectations, with a notable increase from last year. However, higher operating expenses may pressure profit margins. Analysts should watch for efficiency improvements. Our proprietary Bow scores highlight Costco's strong cost efficiency, yet reveal moderate earnings growth and relatively weak net profit margins compared to its retail industry peers. Costco's recent revenue and net income figures indicate a mixed picture for investors. Revenue rose steadily until late 2024, but a noticeable dip in the latest quarter signals possible pressure on sales momentum. While operational earnings remain solid overall, the recent decline highlights risks tied to consumer spending trends and economic volatility. Careful observation of upcoming quarters will show whether this trend persists or if Costco can regain its previous growth trajectory. Costco's strong operating cash flow growth indicates disciplined financial management and effective pricing power, enabling increased cash generation. However, with capital expenditures significantly exceeding free cash flows, investors must remain cautious. These heavy ongoing investments could limit short-term returns. The modest free cash flow yield below 2% suggests valuation could currently be high compared to peers, highlighting potential concerns about whether Costco represents attractive value at the current price. Here is a screenshot of the full cash flow statement. While net cash from operating activities shows robust growth, significant capital expenditures lead to negative net cash in investing activities, highlighting a potential constraint on free cash flow availability. Costco's latest earnings call reflects mixed signals for value investors. While revenue growth remained steady, driven by robust membership fee renewal rates, emphasizing customer loyalty, there are concerns over compressed profit margins due to higher labor costs and inventory expenses. Notably, management indicated increased investment into logistical improvements and technology enhancements, which could strengthen efficiency and decrease costs over the long term. However, rising operating expenses challenge short-term profitability, raising questions around valuation levels and future dividend sustainability for cautious value investors. Analysts project Costco's profitability will grow steadily with strong earnings expectations through 2028, supported by efficient cost management. However, achieving consistent profit increases depends largely on management handling possible risks from supply disruptions, competition, and cost pressures. Investors should closely monitor whether projected growth translates into sustained competitive advantages relative to industry peers. A proprietary Bow score reveals Costco's net income and EPS significantly underperform both industry peers and the broader market, raising caution flags regarding earnings strength and competitiveness. Although Freeport McMoRan shows a relatively high price-earnings ratio compared to peers like Southern Copper or Ero Copper, this suggests investors might expect stronger growth ahead. However, its premium price to book ratio at around 3 may indicate limited margin of safety, so value-oriented investors should cautiously evaluate if FCX's growth prospects truly justify this current valuation premium. Our proprietary Bow score highlights Costco's solid valuation compared to its broader market peers, yet signals concerns about its premium valuation within the narrower retail industry group. Our discounted cash flow valuation of Costco projects, steady revenue growth, and responsible capital investment, similar to the approach seen recently with Freeport McMoRan. However, Costco's valuation highly depends on stable economic conditions and consistent operational efficiency. Investors should closely monitor management's disciplined strategy for maintaining healthy cash flows, as fluctuations could notably affect the company's intrinsic equity valuation. Costco's proprietary Bow score indicates strong valuation appeal versus industry peers, yet reveals comparative weakness when measured against the broader S&P 500 index. Analysts forecast Costco's stock price, considering broader market dynamics and demand shifts highlighting potential opportunities, yet investors must remain cautious of market volatility and performance uncertainties. Costco's analyst targets look strong against the broader market, yet appear only moderately positioned within its industry, suggesting analysts see better options among direct competitors. Costco demonstrates disciplined cash management, stable retained earnings, and consistent membership fee renewals supporting profitability. Yet, elevated debt of approximately $10 billion, combined with pressured net margins below industry peers, prompt caution. Investors must closely monitor cost management, margin recovery, and efficiency gains to justify current premium valuation. Make sure to watch another video from our Value Explorer series by clicking the playlist below.